Testing, here we go.
All right, nice.
You guys talk a little bit, make sure our mics are up.
Good morning, everybody.
Top of the morning.
Hello, everyone.
Wonderful. Everyone, we have a real treat today. We are going to be having a very ambitious conversation about the future of money. Our panelists are Dr. Adam Back, co-founder and CEO of Blockstream, whose work on proof of work and Hashcash was key technology for Bitcoin. His work was cited in the Bitcoin white paper. We have Brent Johnson, CEO of Santiago Capital, his work focuses on the US dollar and why the US dollar tends to be very strong relative to other fiat currencies. Brent's views on Bitcoin, I guess we'll explore. And then we have Teddy Vallee, who is in the middle. Teddy runs a macro hedge fund that invests in both traditional finance assets as well as cryptocurrency, and he sort of follows how crypto trades based on interest rates, liquidity, and the like. But I guess the first, so welcome everyone. The first question I want to pose is a very broad one, which is, what do you think the monetary system looks like in 10 years? Adam, let's start with you.
Well, I'm not sure that fiat currencies are going to go away, but certainly, everybody is invested in something, in stocks and bonds, real estate, art, and the current market makes it difficult to even preserve value because of the asset price inflation. And gold hasn't been faring particularly well. So I think Bitcoin has a place there. And of course, the more ambitious version of that is that an eventual return to the gold standard, but with Bitcoin as a basis. So maybe we'll see some of that.
Thank you. Teddy?
Yeah, I think if I look out 10 years, I think it's going to be the system. The system itself is probably going to be fairly similar to what it is today. There might be marginal changes on the edges. I think what will change is probably the price of assets and how things look in 10 years forward. So my sort of overall macro view of what Bitcoin is it's effectively a hedge on increases in money supply. So if you look back through history, there's really been no asset class that's constantly performed the increase in money supply. So the S&P, for example, the data that I have back since 1959, is down roughly 10% relative to the money supply. Since 2007, we're also down about 10%, and since the high in 2000, it's down about 38%. So gold does sort of fit in that piece. It's up since 1971, but if we look at sort of an asset that has a finite amount of supply, to me, it's the only thing that can over time outpace the increase in money supply. For example, over the past 10 years, Bitcoin's annualized is 111%, while money supply is up roughly 7 to 8%. So if I'm thinking about the world in 10 years, and sort of my macro view is that fiscal is the new monetary policy. I think rates are going to have a tough time going any lower than they've been. So therefore, if we do have some type of economic slowdown, that means that fiscal and economic stimulus is a huge part, which is effectively creation of money supply. So what does well in that environment? I think it's ultimately Bitcoin. So I don't think there's going to be much of a large-scale change in the monetary system. I think it's going to look very similar to today, but I think the price of assets is going to look much different.
Thank you. Brent, how do you see the future of the monetary system?
Yeah, I think it'll be, again, pretty similar to what Teddy's saying. I think it'll be similar to what it is today. I think it will be digital, so I think it'll be a central bank issued digital stablecoin. I don't think it will be Bitcoin. I don't think it will be gold. I may prefer that, but I don't think that's going to happen. And so, again, to what Teddy's saying, I actually think there will become an event at some point in the next 10 years which kind of resets the whole system. And then I think maybe some of these imbalances will be taken off the table in one way or another as a result, and then a central bank issued digital currency will replace it.
Adam, what would your most poignant criticism of fiat currency be, and perhaps the US dollar system in particular? I know when you created Hashcash, you created that to deter spammers. Is there some way in which you view fiat currency as a form of spam? And yeah, what's your most poignant criticism of fiat currency?
Yeah, I mean, I guess if people are interested in hard money, then gold is the kind of canonical example. And if you look at why that's useful and why people chose gold, it's basically because it's scarce. And anything that's scarce has an inherent production cost, or it wouldn't be scarce. And basically, fiat money fails all of those tests. And so it has a hard time combating situations of financial stress where politicians and monetary economists will be impressed upon to print lots of money, which is where we are again. And of course, Bitcoin was released in 2009, right after 2008 financial crash, and lots of quantitative easing and introspection from central bankers about moral hazard. And here we are again, about a decade later, with the massive money printing. So it kind of highlights the point that I think the problem with fiat currencies, US dollar included, is that there's it's just too elastic and reactive to short-term political thinking, and so it's hard to use it as a basis. So I mean, people basically don't save in it; they save in other things to try and preserve their value, and that's hard work. So I think for the average person, they just want to keep the proceeds of their work and save for the future. And to do that today is really hard. I mean, you have to be an investor, and you have to do extremely well. It's very hard to to keep up with the asset price inflation in this environment.
Thanks. Brent, given the inherent stability that, inferring from what Adam said, of fiat currency, it may surprise some, perhaps some people in this room, perhaps Adam, that the dollar system has been very stable over the years. It's changed, it's morphed, it's always going into a new direction. But as someone who's a dollar bull, particularly against other fiat currencies, what is your theory on why the dollar is so stable, despite the fact that it can be printed as much as people want, essentially?
Well, I mean, it really just comes down to economics 101, and that is supply versus demand. And I know a lot of people think, well, they just keep printing the currency, they increase the supply. But when they analyze that, they analyze it in the United States. But the reality is that the whole world uses the dollar. And so when you look at the amount of currency that the Fed has issued, relative to the global monetary base, and then you look at how much Europe has issued versus the European, and Japan has issued versus the Japanese, and they have issued a lot more than the Fed has. And so on a relative basis, the dollar gets stronger versus these other currencies. And I think that will continue. The demand for the US dollar, despite all the protestations, despite all the arguments to the contrary, the demand for the dollar has never been higher than it is today. Now, there's no doubt that there's entities and people and institutions that would love to get away from this system. They would like to de-dollarize. They would like to get out from underneath the thumb of the US government's bully tactics, but it's much easier to say it than actually do it. And the reality is if you then do figure out a way to do it, then the US will come back in and force you, for lack of a better word, to come back and dollarize again. So I just think it's very, very hard the system is somewhat self-reinforcing. Every new dollar debt that is issued, that's demand for dollars. And so, entities over the last couple of years, when the dollar, after COVID, the dollar went from 101 to 89 or whatever it was. And rather than use that 10% pullback as an opportunity to, pay off their dollar debt or get out from underneath the dollar debt, they issued more dollar debt. So there's more dollar debt today issued by entities outside the United States than there ever has been before. And so until they actually stop using the dollar and use those pullbacks as an opportunity to leave the dollar rather than double down on it, I think the system kind of stays the way it is.
Adam, a lot of your work focuses on the very inelastic supply curve of Bitcoin. So for example, if the price of copper explodes higher, copper miners are incentivized to produce more. But with Bitcoin, that doesn't really happen. I've heard you say Bitcoin doesn't care. And for that reason, Bitcoin over the past 13 years, it's had a tendency to go up more than it's gone down. What does that mean, though, for adoption? Because for a currency, often it going up can be a hindrance because you want to save it, right? Currency has to be spent. Like if I'm going to the store to buy a cup of coffee and I'm super bullish on Bitcoin, I'm not going to maybe want to spend my Bitcoin. So in the hyper-Bitcoinized world that you envision, what are sort of people spending money with? And if there is sort of a Bitcoin standard, Who's owning it? Is it central banks? Sort of, yeah, what does the system look like?
Yeah, I mean, it's certainly the case that people who have spent Bitcoin years ago have regrets about, their super expensive router or t-shirt or what have you. But I think that's partly because it's going through a rapid adoption phase. Of course, it's short-term volatile. But if you cast forward to the top of the adoption curve where everybody who wants a Bitcoin allocation has settled on what that is and it's stabilized at the full adoption level, then I think the volatility would come down and look more like gold and start to behave more like gold, which is, and apparently gold has tracked very well over very long periods of time in terms of its spending power. Still, of course, gold has some volatility. So, and as the other panel members have mentioned, that effectively fiat currencies, national currencies are likely to persist. So perhaps people will use a kind of combination. And yeah, I mean, I think governments may start to include Bitcoin as part of their foreign reserve makeup.
Brent, what do you think about the possibility of government and institutions adopting Bitcoin as part of their reserve assets? And then, Teddy, I want to bring you in.
I think it's extremely unlikely that governments ever adopt a Bitcoin as a currency. It's possible they may use it as a reserve asset, but I think the likelihood is very low. I mean, I think the one thing I would say is that all the reasons that many of us in the room would say that fiat money is bad is the exact reasons that governments say it's good, right? Governments don't want a currency that can't be debased, right? Governments don't want a currency that holds its value. Governments don't want a currency that they can't control. And so if you made a list of all the positive attributes of either gold or Bitcoin or some kind of a hard money, you now have a list of all the reasons governments will fight to the death not to have it become money, because they want control. A currency is literally the most important tool that any country has to either coerce, encourage, discourage activity by their citizens. It's a form of control, and it's what they use to kind of get what they want. And it's done in a subtle manner in some cases. I mean, most people have no idea how currencies even work. I mean, people in this room are in the top 0.1 of 1% in the world that understand currencies. But governments understand it very well, and they use it to their benefit very well. So the last thing they would want is some kind of handcuffs put on them to eliminate that control.
I guess a question for Teddy, which is, for most of Bitcoin's lifetime since 2009, it was uncorrelated on a long-term basis to traditional assets, stocks, and bonds. Sometimes it would be weekly positively correlated, sometimes it would be weekly negative correlated. Since about 2020, early 2020, March of 2020, Bitcoin, as well as other crypto assets, have been very positively correlated to stocks, other risk assets, S&P 500, stuff like that. How do you view that? Do you have an explanation for why that is? And do you expect that to continue over time?
Yeah, I think it's a good question. For me, Bitcoin itself is probably one of the most macro assets there is. It has the highest correlation with global liquidity, so what's going on with the global liquidity cycle. I think now that it's become more developed and people are looking at it more, it's starting to trade probably more like a risk asset. So in my opinion, it's trading effectively how it should. So my initial premise is that it's the best hedge against basically increasing amounts of currency. So let's just call it M2. Right now, we've actually having contraction in M2. So during these periods of time, you would expect the asset that's hedging you against increased, call it money creation, to be doing exactly what it's doing. I think given the shift in the Federal Reserve, this is one of the largest financial tightenings that we've seen, I'd say probably the past 40, 50 years. During such an extreme event like that, assets likely start to go to one on the correlation front. And what's happening in markets today is you're seeing everything trade together. So it doesn't surprise me that it's really starting to become correlated. I think over time that correlation will probably persist, but Bitcoin does at times seem to lead on the liquidity front and start to sniff out different markets and where things are leading. So 2015 into 16 was a good example. Bitcoin bottomed pretty early. Actually in the high in Bitcoin recently was significantly before the high in the S&P. So to me, it's a asset that correlates with the global money supply and growth cycles, and all of Bitcoin's returns come during this period. So the correlations are going to bop around a little bit, but I think it's acting as it should during sort of a financial tightening like this.
Right, and I think Bitcoin and crypto assets in general have been very correlated with the macro liquidity, interest rates as well. But there also is the micro, and Adam, you're the expert on the micro when it comes to Bitcoin, and I would ask you about the halving cycle, which as a timing tool, I believe still has a pretty good track record of predicting what's going to happen with Bitcoin. Maybe not price predictions, but timing. So could you maybe briefly explain what the halving cycle is, and then also your belief on to what degree it is an accurate predictor of future price performance, as well as where we are now in the halving cycle?
Yeah, I mean, of course, the halving cycle is just a halving of the rate of mining of new coins. So, from 6 1/4 to 3 1/8 and so on, at approximately 4 yearly intervals. And of course, when the halving goes from 50 to 25 to 12.5, that's a pretty big change relative to the supply. But as that progresses further, the percentage change is smaller. It does seem to punctuate a cycle in the market, presumably affecting miners and the supply of new coins. And even though it's not that large of a percentage change in the amount of Bitcoin mined in a year at this point versus the total supply, the fact is that most of the coins are cold stored. So the so-called liquid supply, the amount of coins that are actually on exchange and traded on a yearly basis, is much smaller. So it's plausible that it can have an effect. And it does change part of that dynamic. So, a lot of the volume is no doubt just day trading, they buy and sell. And then there are net new buyers. And so if there's a restriction in the supply, you can see that that could have an incremental effect given the relatively small amount of Bitcoin proportionally that's available to trade on exchanges. Predictive power, I don't know, but it historically has correlated with cycles fairly strongly.
Adam, what can we interpret from the funding rates, which I know you pay a lot of attention to, when funding rates were very high in the bull markets, at the peak of the bull market? What did that indicate, and where are funding rates now, and what does that indicate about risk appetite, as well as the opportunities that you see in the Bitcoin space?
Yeah, I mean, the funding rates are referring to basically a mechanism in perpetual futures, which is designed to keep the price of the perpetual future, which is a kind of collateralized side contract, on track with the price of Bitcoin in an environment where typically there is an excess of long interest, i.e. there aren't enough people that want to bet against Bitcoin in the short or long term. And so the funding rate just basically increases with some cap, like maybe 0.25% a day or something, depending on a platform. It can go up to that, and then that will incentivize people to seek a dollar interest rate on a platform. So in bull markets, that tends to get high. In bear markets, it can go negative. And I think at this point, it's cooled off a bit, and that's probably related to the deleveraging that underlied that resulted from the DeFi failures in the last months. Basically, it caused a lot of cascading liquidations, a lot of contagion between different DeFi platforms, hedge funds, even exchanges that had under-collateralized loans and lending platforms. So I think it kind of reduced the average trader's appetite to take on leverage, and so there's less demand for leverage. And of course, the funding rates in Bitcoin tend to be remarkably high by normal market standards, because people from outside the Bitcoin space don't necessarily have the confidence or feeling they understand it well enough to put money into it to provide margin lending. And so, to persuade somebody to lend you dollars, you basically have to pay them a higher and higher interest rate until they will lend you money instead of buying Bitcoin. And so that's why you get these kind of double-digit interest rates.
Thank you. And key feature of Bitcoin is that you don't have to trust it. You said about all of these sort of blow-ups in the DeFi space. As someone who's been involved in the crypto space for a long time, what do you interpret from that? What do you draw from that? Do you think these blow-ups are necessary? Do you think it's unfortunate? Do you think that people should be aware that just because you don't need to trust Bitcoin, you do need to trust certain platforms you do business with?
Yeah, I mean, I think there was basically a buildup of opaque, so lots and lots of leverage and recursive leverage where people would put assets like wrapped Bitcoin or stable coins into DeFi pools, get tokens representing their stake that had a nominal value, but very, very thinly traded, and put those in other staking pools and just keep going. And so basically you end up with some kind of enormous leverage. It's kind of like the housing bubble. Like, people think, well, houses can only go up, and they leverage and leverage and leverage. Eventually the market falters and it all falls apart because, triggered obviously by these very thin liquidity tokens that represent value, which is only really arising from the kind of momentum of a platform. As soon as the momentum falters, it falls apart. Most sort of clear example being the Terra Luna collapse, because the Luna token, basically it didn't have any value, and as soon as it was used as collateral to issue a stablecoin, and the stablecoin was backed by the Luna token. So as soon as the assets, the collateralization assets, fell below the dollar value of the dollars in circulation that had been issued from it, it was a race to the door, and surely enough, that's what happened. So I hope people learn from it, but I'm not sure. People like risk in trading, so it may build up again. But for the moment, I think that relates to the reduced leverage and lower funding rates.
Thanks, Adam. Just to revisit the macro world for a few minutes, Brent and then Teddy, the US dollar has exploded higher against other fiat currencies, but in particular the euro and the yen. What would be your top reason or top reasons why that has been the case? Let's start with Brent and then Teddy.
Well, again, for me, it's really pretty simple. I mean, if you have gone to, sorry, excuse me, my voice, I lost it a couple days ago. All of the arguments for the reason the dollar is a bad currency, we've got budget deficits, we can't live within our means, we spend a lot of money, we've got a lot of debt, so when interest rates go higher, we can't service it. And as a result, the dollar is going to lose value. All of those arguments for why the dollar is eventually going to lose its value is happening today in Europe and Japan. It's the exact same thing.
You could do with the water.
They can't service their debt. They can't. Their budget deficits are big. They're having to continue to do QE, and so they're having to print their own money. Yeah, sorry. They're having to print their own money at a higher rate than the U.S. is printing theirs. And every time, and the reason, especially Japan, is they've had zero rates and they've been doing QE or some kind of crazy monetary stimulus for 20 years now. And as a result, all of their banks, all of their insurance companies, all of their institutions are chock full of zero yielding Japanese government bonds. So when interest rates go up even 25 basis points, it causes problems because now all those bonds are losing value and their whole banking system is in trouble. And so every time interest rates go up, they have to come out and buy more bonds, which puts more yen into the system, which increases the supply of yen and causes the yen to go down. Now that's the argument they're saying is going to happen in the US someday. But again, it's happening today in Japan.
Right, and it's against, they say it's going to happen to the US against what? A currency, the dollar can't just go up. It has to go up against something. So if against a relative fiat currency, your argument would be it's always going to be worse than the other fiat currency.
Yeah, I mean, once you kind of really understand how the system is designed, all other fiat currencies are really just a derivative of the US dollar because the US dollar underlies the entire global monetary system. If you understood how the gold standard worked, just substitute dollar for gold and it works the same way. And there is going to be a short squeeze, I believe, on the dollar, just the way that many believe there will eventually be a short squeeze on gold.
Teddy?
Yeah, so our sort of fundamental process on currencies is where's the growth cycle going? So effectively, where's global growth heading? And the best proxy for that, we like to look at the global PMI. So historically, when the global PMI is moving lower, the dollar's appreciating. So one, right now, the backdrop is that growth is slowing across the across the globe, which is therefore bidding up dollars. I think another huge factor in this is that the U.S. is significantly increasing interest rates and moving very aggressively, while, for example, in Japan, they're pegged on their 10-year rate to 25 basis points. So the interest rate differential between the U.S. and Japan is widened significantly. Europe that's been the case, but now you're starting to see some things change on that front. However, that growth piece is really driving things in Europe, meaning the dollar strengthening versus a bloc that's having a huge issue on the energy front. And also is not getting any help from China, which has slowed significantly and has not figured out their zero COVID policy. So as a huge trading partner with Europe, China is putting more pressure on them, which naturally causes the dollar to go up because growth is weakened even further. So I'd say those are primarily from the growth perspective as well as from an interest rate differential perspective. Yep. That's somewhat changing in Europe with how the ECB is moving, but overall I'd say those are two main things.
Thanks. I feel like in crypto, there are two sorts of folks. There are people who sort of hitch their wagons to a particular project or chain, whether it's Bitcoin, Ethereum, or Solana, or something else. And then there are people who said, I just like all crypto, sort of like let 1,000 flowers bloom. Adam, I feel like you're pretty firmly in the Bitcoin camp. I'd love it if you could tell us why. And then Teddy, I'd love to hear your point of view, because I know you're into crypto that's not just Bitcoin.
Yeah, I mean, I think that, of course, there's innovation in lots of different projects, but the kind of use case for Bitcoin is the sort of digital gold of the space, and it has the network effects, the committed long-term investors. So in comparison, I think of the other coins as more like utility coins. So the people that buy them to use a function in the network. And if you think about it on that basis, and this is something that John Pfeffer wrote about in an analysis piece comparing rationale for investing in Bitcoin versus other coins, that it doesn't make sense to hold utility coins, to hold an inventory of them on a business analysis basis. You'd be better off to buy them as you needed them. And a kind of loose analogy is if you would buy prepaid minutes or prepaid bandwidth on a 3G plan or something, you wouldn't want to hold those for 10 years because technology improves vastly and the value drops and different technology displaces it. So I think that's the case for utility coins or altcoins. And of course, it's not reflected in the price, but I would argue the price is kind of decoupled from the fundamentals of the situation, just sort of supported by speculators at this point.
I don't know if I disagree with that at all. I think I view Bitcoin as a completely different sort of asset class within the digital asset space versus everything else with utility coins. To me, like I was mentioning before, Bitcoin is ultimately the hedge against basically increase in money supply. However, I think the other parts of the space are super interesting from an innovation perspective and use case perspective, where there's multiple different possibilities or increase in productivity that can come from the space itself. So for me, things like Solana and tokens that are basically able to increase transactional rates to that of Visa allows for significant innovation and basically building on top of that L1. But that's, I think, completely separate from ultimately what Bitcoin is and what sort of Bitcoin stands for. And I think at the end of the day, I don't think Solana or Avalanche or any L1 is going to fit in sort of, or ETH is going to fit in the Bitcoin bucket. I think they're just going to be two separate things. And I think over time, I almost view it like an equity, where there's the ability to increase supply on a lot of these tokens, similar to issuing equity. But ultimately, the value will accrue to the token holders if the tokenomics of the project are interesting.
Adam, does the lead developer of Bitcoin have too much power in the same way that some folks might say, okay, Vitalik has too much control over Ethereum? Is there a centralization issue with Bitcoin as well? I guess the sort of decentralization has been that whoever founded Bitcoin sort of walked away, and I guess they stopped posting in 2011 and haven't really touched their wallet. But is there a risk that that person comes back? I mean, I believe I heard it said in when Coinbase did an IPO, they listed as one of their risks that they don't know who founded it, and sort of this decentralized thing that has existed up until this point may become more centralized.
Yeah, I mean, I think Bitcoin is by far the most decentralized of the digital currencies, and there are lots of of course it's also disorganized, right? There is no foundation or company or startup that owns 70% of the supply, and so there's no message discipline, there's no marketing, so you get to view the decentralization in action. But I think that just illustrates the decentralization, basically. But I think the individual developers don't really have any meaningful control, because there's a lot of peer review. Any change to the code is reviewed by others. There are multiple steps before a binary is built and made available on a download site. And ultimately, there are lots of power users who are looking and not trusting and verifying, basically. So that kind of verification of many aspects of the system is a good thing. And by comparison, most of the altcoins are actually extremely centralized, but put some effort into positioning themselves as decentralized for sort of safety reasons and for marketing reasons. 5 minutes, by the way.
Thank you. Adam, today or tomorrow, Ethereum will move from proof of work to proof of stake. How significant do you think that will be? Will it impact the crypto sort of markets and adoption curves generally? As well, can you speak as to why you think proof of work is much preferable to proof of stake?
Yeah, I mean, I think it's a mistake, actually. But I think the point is related to gold, which is, as I was saying earlier, that the people value gold because it's scarce, and anything that's scarce inherently has an unavoidable production cost. And so, proof of stake and other variants are basically extremely like startups that can freely issue more stock, and you can see that in their supply curves. They're more erratic than central bank and monetary policy committee and a track of M2 supply. Those things are more predictable and more carefully managed than most altcoin kind of supply prints.
Thank you. So we've got a few minutes left, so I'll do sort of a lightning round question for all three of you, which is, to what degree do you think Bitcoin and the US dollar are true enemies? In other words, sort of one must be dominant in order to fully thrive, and it sort of has to kick the other out of the sort of the hegemonic spot at the top. Adam, and then let's go down the line.
Well, I mean, maybe in the long term there will be some kind of shift in back towards a kind of commodity-backed fiat system. But for the short term, I think they continue in parallel, and Bitcoin is more of a savings technology like gold or investing in other things. And
yeah, I don't see it being much of an issue to the US dollar or the system itself. I think ultimately they can complement each other. To me, ultimately, Bitcoin is similar to gold. If you look at the volatility of gold in the sort of the first 10 years of its existence, it was also close to 100 vol asset at times, 50 vol asset at different periods, and Bitcoin today is called 65 to at times 100 vol. So they're very similar in that nature, and I think for me, Bitcoin would ultimately, looking forward, is only 23 basis points of a stock bond global portfolio right now in terms of market cap. So that, in my opinion, is going significantly higher. I call it to 3 to 4% over the next 10 years. So I think the dollar versus Bitcoin is I don't think there's any I think they complement each other versus it replacing it.
Yeah, I mean, I agree. Like right now, they can coexist. It's an asset. It's a a store value, however, a reserve, however you want to describe it. But if Bitcoin does what many people in this room think it's going to do, and it continues to grow its adoption and rise in value, it will inevitably come into conflict with the global reserve currency or with the dollar. And it is inherently political. If you read the white paper, the title has the word cash in it, and in the second paragraph it says money system. And the government doesn't like competition. And as I mentioned earlier, a currency is the biggest tool that a government has. So you can see now that gold and the dollar, they coexist and it's no issue, but they have come into conflict in the past and they may come into conflict again in the future. I think it would be naive to think that if Bitcoin continues its rise and its innovation and its adoption, that they would never come into conflict. I think that will come into conflict. And I personally would think it would be naive to think that the government automatically loses that battle. I think that they can do many more things than they've already done. If they chose to do it, I think they could do many more things than they already have to discourage its use.
Very interesting. I'll give the final word to Adam, which is, over the past 13 years, Bitcoin, the price has exploded without really coming into conflict with the US dollar. I think this bull cycle we saw it a little bit, but for Bitcoin to get to $250,000 or $1 million per Bitcoin, does it really have to sort of knock on the door of the US dollar and make some very powerful people very uncomfortable?
I mean, in a lot of ways, Bitcoin didn't seem to run into conflict, even in the last 5 years. So people expected more kind of regulatory friction and pushback, which so far, of course, there's like various factors, but so far it seems to have been kind of increasingly accepted. And of course, there's still quite a lot of ambiguity about rules, but that's gradually improving, and more kind of mainstream financial institutions offering Bitcoin-related services. So I think all of those things feed towards gradual acceptance. Of course, you're right that governments may run into conflict, but we'll see how it develops. If it's sufficiently decentralized and global, one country's views on it or discouraging it doesn't seem to have hurt things so far.
Interesting. Thank you so much. I've really enjoyed this panel. Thank you, everyone, for watching. Let's give a warm round of applause.